Okay, welcome everybody. This is Patrick Zielbauer from Infinity Futures. It is 3:30 on Monday, February 5th. Thanks everybody for coming to the event. Today we're going to focus on Sierra chart and some of the things you could do inside Sierra. I thought I'd keep the dome up here just so we could watch the reopen. Obviously, it's been kind of a hectic day, but we'll talk about that a bit as well. First, let's go through some risk stuff. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, so I'll go ahead and move the dome off the screen there. I was just kind of curious to see how the market would reopen. We'll talk about some of the things that happened today and try to work that into our presentation a little bit. But basically, for those of you who are new to this event, I hold a webinar every Monday that focuses on Sierra chart, which we offer and support here at Infinity. And one of the things that I generally like to try to get across in my webinars is the idea that it's possible using Sierra to really simplify your approach. And what I'm getting at when I say that is that we are, as people in the brokerage or in the brokerage business and in the trading business, we are all pounded with just constant streams of data. It's like drinking water out of a fire hose, to put it loosely. And there's a lot of debate about whether or not that is good or bad. And I personally tend to believe that decision fatigue, which is a concept around rooted in the idea that as you are forced to continually make decisions, that the quality of those decisions can deteriorate, is real. And I think that in trading, it gets brought to the forefront a lot faster than in other lines of work or businesses that people are involved in. And so that's the reason when I do these events, it's not to show like necessarily the coolest or most complex stuff. It's the opposite often. It's the idea that we could try to simplify things. And I like to take feedback and ask questions, and I like to incorporate what my customers are doing into these presentations, because after all, this is not a sales presentation. This is a presentation about our charting program, and most of you that are here are already our customers. All right, so this is for you guys and gals. Really important to reiterate that. For those of you who are joining us, obviously we appreciate you coming and checking things out. Feel free to ask questions. All right, so this presentation is going to be focused on creating and managing alerts inside Sierra. And those alerts could be audible, they could be visual, it could be the background changing color like you see on a couple of these, it could be the bar itself, it could be other things like putting a little arrow or a star somewhere, or it could be an audio alert. And what I like to do inside Sierra sometimes is play around with the capabilities that exist that allow me, as someone who is not a developer or a programmer by trade, to really utilize the power of this program. Now, if you are a developer or a programmer by trade, you will love this program. But if you aren't, you will still love it, because you will realize that you can do some things that you would have thought you'd have to be a programmer or a developer to be able to do. That's, if that's you, then you are, my audience here. All right. And the general concept behind what we'll be talking about today is to try to show you how you can look for a condition that you might be already looking at on a day-to-day basis and whittle down the amount of inputs that you're actually focused on seeing throughout the day into something a little simpler. The objective is not to necessarily flip you into like a green light, red light trading mode, like if it goes red, you buy, and if it goes green, you sell, but rather to get you to the point where you would make that decision just a little bit faster. So as an example, if you are looking at 5 or 6 indicators and you're watching them all line up in real time and you're waiting for them to trigger that perfect moment, and you're trading something like the NASDAQ or gold or the Russell or something that's really moving, you may find yourself missing trades as a result of that. So that is what we're trying to get after here. Now, another thing that I will also mention, 2 things about the charts themselves. Anybody who wants a copy of the files that we are going to be working on today, just email your rep in our office once we're done and we'll send them all to you. The idea is that if you can use the files along with the recording, you can go back and watch it on your own pace with the software itself on your computer. That's a really good learning tool. So please feel free to do that. The other thing is that a lot of this stuff is just testing and hypothetical. So don't expect to learn some magic trading system in this presentation. This is about the mechanics. Sometimes we do point out some really cool stuff. I have my own opinions about how to look at the market. They're my opinions. But bear in mind that, especially with a day like today, we need to be cognizant of the fact that, a lot of things get sort of thrown out the window when you have like a liquidation sort of day like this. On that note, I've been working for Infinity for 14 years or so, and I've seen a lot of wacky things happen in this time. And I don't know, some people might just think I sound tired, but I'm actually just quite relaxed. This was definitely an anomalous day. It was not, I think, even in the top 10 of like market crashes, so to speak. Certainly, there's a little bit of fear out there right now with the VIX rallying and the market selling off this way. But there's kind of this, inkling feeling that we all kind of knew this would happen, and it was just a matter of time. And so, if you're spooked, try not to be too spooked. Hope, if you have some powder on the sidelines, so to speak, that kind of helps. But we are looking forward to, a little bit more movement and activity and volatility in the market. We've been waiting for it, and we're kind of excited to see, some action, so to speak, out there. So hopefully, you're prepared and excited as well. If you have any questions or comments throughout, please feel free to share them. Okay, so again, thanks for coming. Let's start by going through some of the examples that I've created here on the screen here that are focused on operators. Okay, and what I mean by operators is that inside Sierra, there are certain operators that are kept track of inside the chart itself, meaning you don't have to add a study to get this piece of data. So as an example, like let's pretend that you're looking at some sort of a study or a combination of studies, and you need the high of the bar. All right, you don't have to add a study that tells you the high of the bar. The charts are already keeping track of what the high of the bar is. So it'll keep track of the high, the open, the close, or the current price, the low. It'll keep track of bid volume, ask volume, volume in aggregate. So there are several of these operators that are usually key in the development of some kind of a signal. And it's important to note that if you're relying on things like moving averages and things like that, then for those, yes, you definitely need to have a study added to the chart. But if you don't need that stuff, if you want to focus on the candles themselves or some of the characteristics of the candles, you may not need to add studies to do that. So here, I want to go through first, slowly, an example of one that I created. I wrote some notes out for it. I will include the notes in the email that goes out with the chart files if anybody wants a copy of them. But let's start off by going through this example. So I called this study here a rejected high or a rejected low and a rejected high. Okay, and this is a gross oversimplification of a style of looking at candles where if the market makes a new low and then makes a new high, that you might be looking for a change in the trend or the market to rebound in the other direction. So, and again, there's a lot of factors that would go into why that would happen or wouldn't happen, but let's assume that that's the kind of thing we're going for. So where you are seeing the red and the blue candles here right now are based on what the market is doing in the current bar versus the bar prior. All right, so a lot of my examples, we are going to show you how to look at the current bar versus something that happened in history. It could be the bar prior, it could be 2 bars prior, it could be more than that. But in this case, we're looking at the bar prior. So what I would first like to do is bring up the study, and I'm going to bring up the alert code that you see here. You see, this looks like gobbledygook to most people. So when you pull this up and look at it for the first time, don't think I just sat here and like typed this out with my eyes closed. Okay, each of these represents a little piece of the condition that I'm looking for. And the idea is that in Sierra, you can combine a series of conditions and then test for them all at once. All right, so here's how these all work out. All right, let's bring up my notes here for a minute. The rejected low has several pieces. Okay, it has these 4 pieces. Each one of these lines represents one of these little sections that are between these commas. Okay, so the first, and you notice that they're encapsulated in a giant parentheses with the word "and" in front. That means that we want to see if all of these things are true, then our condition is true, not just one of them. We could use the word "or" in front if we wanted any of them to be true, therefore the condition is true. That's not what we're doing here. In this case, we need all of these things to be true. So here's our rejected low criteria. Means the close is greater than the open. That's this section right here. Okay, close is greater than the open. C, meaning close or current price. If you're looking at the current bar, that's the current price. If it's the prior bar, it's the closing price of the bar. C greater than O. That means that the close is greater than the open, therefore we have a positive candle. So criteria number one here is that the close of the bar is greater than the open of the bar, therefore the candle is positive. Okay, that's first criteria. Second criteria, the low is lower than the low 1 bar ago. So you see this here that says L minus, or L is less than L in brackets with a -1. See that? So L is less than L with a bracketed -1 next to it. That means that the low of the current bar is less than the low 1 bar ago. Okay, the low of the current bar is less than the 1 bar ago. That is the second piece of criteria that we've got for our condition. All right, the third piece of the criteria here is that the high is greater than the high 1 bar ago. So that means that the market must have busted out of the range of the prior candle. Here's an example I'm just looking at right now with my eyes. This is a good example of this candle occurring. All right, so the low is lower than the prior low. Okay, so we see the low here, the prior low is here. All right, at the well, this is actually this is not a great example because this is a rejected low. This is the opposite. We'll come back to this one in a minute. Okay, let's look at this one right here. So this one has a low that's lower than the prior low, and a high that's higher than the prior bar's high, and it also is a positive candle. So this is so far meeting our criteria. Therefore, that blue background is coming up, and I'll show you where we can select the blue in a minute. But this is the type of criteria that I'm looking for. So the high is greater than the high 1 bar ago, and the current price, or the closing price of the bar, is greater than the prior bar's high. C, or closing price, is greater than H with a -1 in brackets. Again, the -1 in the bracketing means that we're looking at the high, but not the current high, the high 1 bar ago. If we wanted to look at the high 2 bars ago, we would have H with a -2 in the bracket. All right, so the idea of this trade, or this setup, I didn't write the code first. I thought in my head, okay, what is a situation where I see a lot where the market rips lower and then rips higher and it throws everybody for a loop? Well, that happens when the market breaks down, breaks its low, everybody wants to get short, so the market sucks all these wannabe shorts into the position, and then it rips higher and then makes a new high, and that's the potential for a trend in the opposite direction. So that's the thought process that I went through in my head. And then from there, I went to the notepad and started writing these things down. And that's how you come up with the code. So it's not like something that I saw in a video or something that I bought or anything like that. This is an idea that I often see in the market, and it's often caught me off guard. And so how do I stop myself from getting caught in a situation like that? This is one way that you can go through the process. So that is what I call the rejected low. So what you would do to get this working on your chart, okay? And let's go ahead and we'll start a brand new chart. So if you want to try to follow along, I'm going to go a little quick, but I'm not going to go so quick where you probably wouldn't be able to, follow along with us. So let's open up a NASDAQ chart here just for kicks. And what you would do is then add a study, excuse me here. Okay, add a study called color background based on alert condition. So you just right click color background based on alert condition and add it. And in the settings section, the most important place for this particular study is the alert tab. So in the alert tab, you just copy that text that you did. And you do have to be precise. You have to have the right number of parentheses, and if you have a bracket missing or something like that, it's going to give you an error message, something like syntax error or something. You have to go back and check. But this is how I build these studies. I don't just like code it, like I was working the matrix. All right, piece by piece by piece, put it in the right order. And actually, in this case, it doesn't matter what order it's in because everything needs to be true. And then put the entire thing in a parentheses with the word and in front of it, meaning everything in here has to be true. All right, once you have the code in there, you can go to the subgraphs tab and pick a color. In this case, I think I had like a blue color. You can, change it up if you want. And then back in the alerts tab, someone was asking the alerts. So, you can pick an alert sound here. Alerts, I think there's probably alert 1 through 15 or so actually have a sound attached to them. If you want your own alert sounds, you can download your own wave files. There's a folder in your Sierra chart folder on your hard drive where you'd have to put those files, and then you can assign alert sounds to specific alert numbers. I'm not really going to go through that process here, Mandeep, but if you email your rep in our office, that's an easy one for us to show you how to do. So if you want to make your own alert sounds or download WAV files or something like that, you just have to put them in a certain folder that our program can see, and then you can attach different sounds to each alert number. All right, so I'm going to leave it at no alert sound for now. The other thing that does come into play sometimes for certain traders is the idea that this should only be evaluated on the close of the bar. All right, some people don't like when a signal is true and then untrue and then true and then untrue in the same bar because the market is moving up or down. So as an example, if we were looking at this in real time and we did not have this checked, it's possible that in one moment the alert is true, and then in the very next moment the alert is no longer true because the market has gone up or down. If that's going to bother you, where you're going to see the blinking of the color going on and off, then you should turn this off. Or excuse me, you should check this box. If you want to be able to see this stuff in real time, sometimes traders look at indicators and they're like, oh yeah, that sounds really great, but am I really getting that on the fly, or am I only getting it like 5 minutes later? You can get this stuff in real time as it's happening. You just have to be prepared to deal with the indecision that's going to come to you when you are seeing the signal be true and untrue in the same moment. So it's like, oh, it's true, and you're like, you get excited about it, and then 1 second later it's untrue, and then you're like, well, maybe I should hang on a second, and then sure enough, it runs away without you. So you have to sort of see where you would fall into that camp. Okay? All right. So if you want, you can evaluate the condition only on the bar close. All right? So I'll just apply this. All right, and then we're going to get some semblance of instant results here. So let's look at a couple that came through on the NASDAQ. So I'm going to zoom in here a little bit. Okay, so here's a couple of examples on the NQ. So like this one here, all right, the market is a positive candle. It has a lower low than the prior low. It has a higher high than the prior high, and it's above the prior close. So this is clearly a signal. So this is the type of thing where you could incorporate something like this into your larger decision-making skill set. It doesn't have to be the only thing you're looking for, but as an example, if you were to see something like this come through and you were looking for, and you also had a short signal come through, maybe this keeps you out of a bad short. And if that's all it does, it's still worth the effort. Sometimes if it keeps you out of something that could get you in trouble, and I've got plenty of opinions on that as well, that's worth just as much as a great trade, right? Staying out of a terrible one. All right. Okay, so there was a couple, Ron, sorry about that. So I know this is a huge monitor, so let me just make the text bigger on this. And then of course, you guys can all have the text as well. I'll just make this a little bigger so everybody, maybe you can see it a little bit better. So this is the process that we went through for the rejected low. Close is greater than the open, low is lower than 1 bar ago, the high is greater than the high 1 bar ago, and the current or closing price is higher than the high 1 bar ago. All right, so if we were to say this in English, the bar is positive, the bar made a lower low than the prior bar, the bar made the high of the current bar is greater than the high of the prior bar, and the current price is greater than the prior bar's high. That's our setup. That's what I call the rejected low. Okay. If you want to put a custom name in something like I did, where instead of the study name here, where it says color background based on alert condition, you want to put your own name in, you can do so right here, like this. You can see it's going to show up right there, like that. Okay. So if you want to name it, if you have like a lot of the same study, each one's a little bit different for some reason, that's how you can create a custom name. All right. Okay, so now let's go to the rejected high side. So this is the opposite. So and a lot of times when you have two different permutations of the same study where one is long and one is short, you can just flip the greater than less than signs. All right. This one's a little bit different because we have to be looking at the highs and lows in different areas. So it wasn't as simple as doing that. But let's talk through it with the symbols and then in English, and then we'll put it on the chart as well. So rejected high. The close is less than the open. We have a negative bar. Okay, the high is greater than the high 1 bar ago. So the market spiked up and broke the high of the prior bar. So now we're sucking in all the long people, right? It's like, oh, the market's going straight up. All right, so we're looking for that to happen. So the high is greater than the high 1 bar ago. But to those people's dismay, right, the low is now lower than the low 1 bar ago. So the market has gone up, made a new high, and then made a new low relative to the prior bar. So all those longs got sucked in. They're all along the market, and now the market is collapsing. All right, and then the last condition is the current or closing price is lower than the low 1 bar ago, meaning the market is breaking. It's breaking below the low, and that's where it closed. So for those of you who use the evaluate on bar close, then in this case, that would be redundant a little bit, but it doesn't hurt to have that condition in there. All right, so if I just copy this text, okay, and then we'll just go into our studies here. Sometimes when I am making studies like this, I will just duplicate the one that's there and then just change the color and the alert text. So I'll just put this new text in there. Let's give it ourselves a different color. Let's do something different like this. And then we'll do test 2 and apply. Okay, so there's our example. So, I mean, you're not always going to get this many signals, and certainly there are ways to filter out some of this stuff, including one way to filter them out we'll cover in a minute, but just as another example. But the point of the exercise here is that sometimes you'll find that your ideas actually are really, really good. You just don't know how to put them in practice. And instead, what that means you end up doing is you end up taking someone else's indicator. It really wasn't that's not rooted in your belief system. It's someone else's belief system. And so you put that in the chart and then you work within the limits that that person has set forth for you. Whereas what this is doing is this is asking you, okay, what are the pitfalls that you, John, or you, Carol, or you, Adam, or whatever, what are the problems that you have had? Where are the trades that you get caught on the wrong side? So try to think of what those conditions are. You could probably go back and look at your trades and be like, man, there's been a million times where that new high got made and I got long and then the market just ripped right down without me. This is an example of me being in that same position, and how do I stop that from happening again, or at least, do everything I can to prevent that. So that is what this exercise is intended for. Again, this is a bit of an oversimplification. I think there's still some validity here, but let's go on a little bit and talk about how you can incorporate some other stuff. Okay, and then we will go from there. All right, a couple questions. Ron, if we have some time, I'll do your demonstration. That's actually a real simple one, so it shouldn't be an issue. And Bill, does it include the wick? And the answer, Bill, is that yes. If we're talking about if we want to include the high, when we reference the high, that represents the high of the candle, not the close of the candle. So the high is going to be the top point of the wick in the candle. So inherently, or the lower point. So inherently, if we're using the high, we are using the wick. If you want to use the close, like the actual bar close, then you can use the closing price of the bar. But we're talking about stuff that's happening in real time. So generally speaking, I'm looking to see, I'm not looking to wait until the bar closes before it's evaluated. All right. Okay. Yeah, Steve, the reason why it's red is because I was scrolled back because I was trying to get some examples in here from before. But if we scroll forward, we're going to see, the market in real time, because the NASDAQ trades for or the indexes all trade for another 5 minutes or so. Okay. So here's another one here, and these are, it's kind of a mishmash around this time of day. I mean, especially on a day like this. But yeah, this is an example. Steve, if you scroll back in time, it will not catch up until you bring it back to the front, and then it will stay there. It won't. You don't have to do anything to keep the charts scrolling forward. They will scroll forward unless you scroll back first. If you scroll back first, you got to bring yourself back to the end. Okay. All right. Yeah, interesting stuff. So, okay. Now, what I did was I made that basic operator example on a bunch of different markets. So I made one for the S&P, the NASDAQ, the Dow, gold, crude, the Russell. These are markets that the majority of our business takes place in. But what I wanted to also do was show you one very brief example before we move on a little bit about how you can filter, one example of how one might filter some of these signals out. So the chart on the right is the same as the operators from the other chart book we were just in. And the chart on the left is those same things as well, with one addition to the filter. And what I'm going to do here is right click on the on the chart and go to studies. And let's go to that rejected low alert condition. All right, and does anybody see something different about this formula than the prior one? If you can make out the text, that is. All right, I'll just go ahead and answer it for you. I'm sure you've all found it by now, but the very last condition is the volume. All right, the volume. The volume is greater than the volume 1 bar ago. So while we're seeing this expansion in the range, we are also seeing increased volume. So a new requirement of my study, in this case, is an increase in volume over the prior bar. Now, what's another way to look at volume on a chart? It's to add the volume study, look at it at the bottom. You can put it on the bottom of the screen, and you can rely on that visually, and you can also use that data as parts of other studies. You certainly could do that. But if your interest in the volume is not the number of contracts traded, for example, but rather the relative amount of volume to the current bar and the prior bar, then why do you need the volume down there? You need it down there because you're used to having it down there and it makes you feel safe. All right, it's hard to take the stuff off the screen sometimes. But if you actually only care about the relative volume in the current bar versus the prior and not the number itself, then don't put the number up on the screen. It's worthless. Okay, so this is an example of how you might filter out some other signals. Now, you can combine these basic operator examples with studies. So you could say something like, okay, I want to see all this stuff happening, and we're below the 5-period, EMA. So that is doable. You don't have to use only the operators. You can use anything you want, but I wanted to show you something you could do here without really any indicators at all. Okay, Ron, try and zoom in. Okay, you have GoToWebinar. You can zoom in if you need to. I'm sorry, it's a big screen. Okay. All right, so a couple other examples that I wanted to do that are of similar idea. One is I just did one simple volume example here. And this, again, does not stand on its own 2 feet. It's this is purely for demonstrative purposes. But what I did here was I added a condition that I'll show you in a minute. And then I did add the volume study at the bottom of the screen here so we can see visually what's happening. So if you look at this gray background, okay, this gray background is coming up because we're seeing increases in volume 3 bars in a row. So if you look down here, you'll see volume is here, then it's here, then it's here. Because it's gotten 3 in a row higher, this gray background is showing up. So this is another example of a study that is made just because of, or being displayed simply because of volume. So the alert tab, it's this custom study here. It looks very much like what we did before. It's just 3 instances of volume is greater than volume 1 bar ago, volume 1 bar ago is greater than volume 2 bars ago, and then volume 2 bars ago is greater than volume 3 bars ago. So it's really the same exact thing, just broken out 3 times to look 3 bars back in history. So the objective here is to demonstrate to you that you can use this function to test for things like slope. So if you want to see a change in the slope, you can use this same idea, but it allows you to extrapolate that a little further by going back X number of bars, as many as you want. Okay, I think you could probably fit maybe, before you run out of room for text here, maybe 20 bars. Now there are ways using Sierra's spreadsheet system and other things where you can look back a lot further, but for someone who's just looking for something basic, I want to look back 5 bars, I want to look back 10 bars, you can do it this way. Okay, that's the extent of this one. I didn't want to spend a lot of time there. Okay, this one here, this chart book I called the bid-ask volume slam, vol slam. And so what I did here was this is another one that uses only operators. So what I did here was I created 2 different color background studies, the bid slam and the ask slam. So if we go to settings here and we go to the alerts tab, you're going to see this new and possibly very interesting alert that I've created, which says BV is greater than 4 times AV. All right, can anybody guess what BV is greater than 4 times AV means? All right, in the context of the operators we have discussed. Okay, it's bid volume is greater than 4 times the ask volume. Right, exactly, Kelly. Well done, Richard. So the bid volume is greater than 4 times the ask volume. All right, that's one text. And then the ask is another one. let's just change the color of the bid one to, oh, it's already red. Okay, sorry about that. Okay, so bid vol, the bid slam versus the ask slam. So bid volume is greater than 4 times the ask volume. And then this one is the opposite. If we go to the ask slam, its ask volume is greater than 4 times the bid volume. So for those of you who are interested in order flow or that idea, you have done a couple events on this sort of thing, bid volume and ask volume is often looked at to see if the majority of the volume is hitting the bid or the offer. Large amounts of volume hitting the bid would be the, again, a little bit of an oversimplification, but would be something like a big program coming in and hitting sell market with 100 lots in the queue 20 times in 30 seconds, or 50 or 500 contracts over and over and over again, where they're just hitting the bid, sell market, sell market, sell market, sell market, sell market. So what the platform and what our brokerage does is we have the capability to show you whether a trade was done on the bid or the ask. So if the bid is getting hit hard compared to the offer, then that in some cases could be bearish because it means that someone is putting in a bunch of sell orders. Now, there are lots of situations where the volume getting slammed like this could actually be bullish, which is why I also want to state that this doesn't necessarily stand on its own foot by itself. A good example of when a bid slam could be bullish is if the bid slam occurs or continues to occur, but the market doesn't drop. That means that the market is reacting to these new bids hitting and a whole bunch of buy orders are now coming in to account for the fact that the market is getting slammed on the bid side. So someone sees it happening and they're feeding in buy orders to match. So that could actually drive the market higher. So that's an example of where a bid slam could still be bullish. So again, you don't just see the red and go short. It's not that simple. You really want to incorporate this into a larger decision-making capability. But again, the purpose of this is to demonstrate the operator. So just to look at the code one more time for the ask slam here, ask volume is greater than 4 times the bid volume. That's very bullish if the market reacts. All right, ask volume is getting slammed. The ask is getting hit. Someone's hitting buy market, buy market, buy market, buy market. No one's hitting sell market. It's all buys, buys, buys. So the ask volume is dramatically higher, greater than 4 times, in fact, what the bid volume is. And you can put whatever number you want. Obviously, the higher the number, the less signals you're going to get. Let's put this to a 6. Okay, you'll see in the background a bunch of the signals go away. All right, let's go back to 4. Okay, some of them come back. So you have complete control over this. It's not a static thing, and we've actually made some scanners and stuff that have variations of this color based on these different values, which is also kind of a neat thing you can do in Sierra rather than purchase it from someone for $5,000 that works on one of our competitors' platforms. That just is not necessary, and that's the idea. All right, so this is another example of simple the way that somebody can use simple operators. So open, high, low, close, volume, bid volume, ask volume. Those are the majority of the operators you would need. You can probably create a lot of what you're looking for in terms of candles and patterns if you're into that without even using any studies, just using those operators. Okay? All right, cool. So hopefully you find that useful. So I went through a couple of other alerts, but I think what I'm going to do are a couple of other examples. I did one earlier today based on value areas. So like if the market is breaching its value area lows or value area highs, you can see a notification. I'll demonstrate one like that in a minute. But I also wanted to demonstrate, based on some of the questions that were coming through, how you could, how someone could incorporate this into their own analysis. So one person, Ron, had a question about the moving average. So Ron's idea was like, okay, if the 5-period moving average is above the 10-period moving average or something to that effect. That is something that's really easy to do in our program. So let me first, I'm going to build that one from scratch, and then we can extrapolate a little bit on that and maybe even do a couple more in the remaining 20 minutes or so that we've got. All right. So first thing I'll do is open up another chart. I'll just use the NASDAQ here because that's what's defaulting. And I will add a study that we have that's called moving averages. So moving averages combines basically 3 moving averages into one study. I like to use that because it means I don't have to add the moving average study over and over. So in the settings and inputs, I'll use 5 and 10. We'll make them simple moving averages per RON. And then the last one, I'll leave at 15 because I'm actually going to probably keep it hidden. In fact, you know what? No, I'll keep it at 50. So we'll have one that's a little bigger. So 5, 10, and 50. And then for the colors, I'm going to delete these custom names I put in here because mine are defaulted to 8 and 34. So we'll do 5 SMA. And you don't have to use a short name. I like to use a short name because I like the label on the right side. It makes it easy for me to see what's going on. 50 SMA. Okay, so now we've got these. Oh, this one is set to hidden. Let's make it viewable. Okay, so now we've got the 3 moving averages on the chart, like this, and we can see the 50 and the 5 and the 10 are basically on top of each other. So it's kind of hard to see, but you can see that they're near each other. And then here's the 50. Okay. By the way, yes, we are recording the presentation, Sadia, and it will be up on YouTube, within a day or so. Okay. Okay, so one very, very simple example about how to use the color background or color bar study is to use a moving average example like one Ron gave us. So the first thing I'm going to do is go to the color background based on alert condition study. And we need to remember those ID and subgraph numbers. So this is something we haven't really talked about yet because we were focused only on those operators, but it's important to note that every study has an ID number. In this case, it's ID 1. And every study has subgraphs. Subgraph 1, subgraph 2, subgraph 3. So Ron and anyone following what Ron is getting at, he wants to know or be notified when subgraph 1 is greater than subgraph 2. In other words, when the 5 is greater than the 10 period SMA. So that's a really easy condition, ID1, SG1, and then ID1, SG2. So here's how our condition in the color background study might look. First, let's pick a color. I'll just do like a muted color like this. And we'll say ID1.SG1 is greater than ID1.SG2. This means when the first subgraph of the moving average study is greater than the second subgraph of the moving average study, we want to be told so. Okay, simple as that. So we're getting a visual notification and an audible one if we want one when that occurs. All right, ID1.SG1 is greater than ID1.SG2. All right, now what ultimately happens here is that people go through this process where they say, okay, I got the moving averages. Now, what happens? Okay, well now I add my CCI or I add my ADX or my stochastic or whatever it is they're interested in, and you start to add more of these conditions to the condition you've made, and then you can actually get rid of the indicators, or at least temporarily hide them so that you know that they're there, but you don't necessarily have to look at them all the time. So as an example of that, if I were to just click on the moving averages study, well, first let's name this color background. So let's call this Ron's 5 greater than 10 SMA. Okay, so we've got Ron's 5 greater than 10 SMA. So that's what we've named the study. What I could actually do then is click on the moving averages study, and click the hide button, and apply it. And what happens is the lines go away. They're still there. Can't remove the study altogether. You need the study in the background to generate the condition. But what this ends up letting people do is clean up the screen a little bit. So they don't have 35 lines on every screen, times however many time frames you look at, times however many markets you look at, and how many hours you spend looking at it. So that is sort of the objective. This is a very easy example. Ron, hopefully that clarified your question, but this is something that anybody can do. And what this is also a neat process for is it really forces you as a customer to inventory your decision-making process. And if you cannot define the points where you may enter the market, that doesn't mean you don't have a strategy. It just means you have a very subjective strategy. A very subjective strategy is great for some people. It's awful for others. So you may be able to look introspectively and say, you know what, I definitely have a habit of justifying every trade I take after the fact. Maybe I need something a little bit more rule-based. This might be useful for you. if you're the opposite and you're a data technician by trade, and you have 45 indicators on the screen, and there's never a single instance where all 45 of them are going to line up so you can get into a position, then you might want to test your judgment a little bit and maybe try to back some of these out so you don't have so many conditions where you can never see them line up to take a position. We have people on all ends of the spectrum. All right. Now, there are other ways to display the same data. I'm going to copy the text here from the alert condition, and I'm going to add another study that we have called color bar based on alert condition. If you don't like the color background, you can use color bar instead. I'll just paste the text in there and it looks like this. Okay, now you're getting the bar itself can be colored. Furthermore, if you don't like either of these things, like you'd like to be able to see the color of the bar in its natural state, and you don't like the background color because it drives you crazy, then you can use the color bar based on condition study. I'll just duplicate it, but you can change the output of the signal from actually coloring the bar to doing something else. So this is a little bit tricky. I have a video on YouTube on how to do it, so I'm only going to demonstrate it here once. And then I'll, if you want to watch the recording or see it on YouTube, you can. But here's what you do. You go to settings, all right? And then you go to the subgraphs tab and you change the draw style to something else. So let's pretend that I call this, point on, let's call it point on high. Or let's just call it, no, you know what, let's just do a point. So I'm going to do a point, but you can't just do this on its own. There's a couple other settings you have to change. So we go to point. I'm going to make it a little bit bigger, so when we finally get it up and running, you'll see how it looks. And then in the settings and inputs tab, you have to change a couple of these outputs. The first one is this output condition when true. It defaults to 1 because the bar is either colored or it's not colored, so it's 0 or 1. In this case, it has to be changed to use input data. And the input data is basically referring to the high or low of the bar plus or minus some space before where the point is going to be displayed. So what I typically do is I'll use 25, which means we're going to put the point 25% higher than the high of the bar, so it's not sitting right on top of everything, and it would look like this. All right, now if you like that, but you wanted to have, like, let's say an opposite condition that was on the downside, you could duplicate the study, do the same thing, and you could use -25 and use the low as the input data, like this. And now you get the points down here. So what we are now showing are basically, 1, the color background, 2, the bar itself, 3, the points above, 4 below, the points below, 4 different ways to show the same condition. The objective, again, to demonstrate that this really is an open-ended program that you don't have to be a developer to use. Okay. Okay, Sam. So hopefully, yeah, that answers your question. If you want it to only, if you want the alert to only display one time to further answer your question, there's this option here that says alert only once per bar that you can use. I actually don't use this, but I think it would work. So you could maybe you can test that one out, but it's doable. All right, alert only once per bar. Richard, I will post a link to the operators on Sierra's website. Just remind me before we wrap it up, and I'll get that link out to everybody here. That's a good one to bookmark. Okay. Ron, rather than a chart plot, can the SMA filter be on an end of day search on the S&P 500? Well, we don't offer individual stocks, Ron, if that's what you're getting at. So no, we can't do that. But you can apply, the same concept to daily charts across the 35 or so different CME products that we offer, as an example. So if you wanted to build a screen that sort of resembles this behavior with different products, you can right-click, duplicate a chart. Sometimes I'll use the tile vertically option to get them next to each other, and then you can very easily change the symbol using the keyboard. So as an example, that's the ES. Okay, you can duplicate it again and again and again. Tile them as I use the tiling options under here a lot, especially tile as grid vertically. So we have NASDAQ, S&P, oops, YMH8. There's the Dow, and then we'll throw up. Here's crude oil as an example. All right. And then there's another webinar we did a little while ago that talked about the study summary. The study summary is a window that is kind of like a radar screen where it is keeping track of all the stuff that you've got on the charts. So you don't have to have all these columns displayed. A lot of times when I'm using the study summary, I will not show these daily regular quote fields. I'll just show the studies themselves. So if you're looking at this study summary, you can look at this thing pretty quickly and see what charts are highlighted. And if they're highlighted, what the condition is. So this is an example of the NASDAQ one being true, because right now the NASDAQ is the only one of all of our charts where the current bar has a true condition. So it's giving us the background color. All right. Mandeep, you can use this study setting window to show the daily open, high, low, close, like regular quote data, but you can also use this same window, and this same window will pull study values from your charts if you want them to. Okay. So, as an example, if you were to add another study here, you could, here's an example. I already have a moving average on there. Why isn't the moving average in here? It's because in the option here under settings, there's an option that says include hidden studies. So if I include that, it will display. Hang on. Oh, you know what? I'm sorry. There's I have this specifically set to not display right here. So you can turn off these individual lines. I had originally defaulted turning these off because I had too much stuff in my study summary. But this is an example of how you can take real-time data from the chart, the studies, and pull it into the study summary so you can see a summary of all this stuff in a maybe an easier to read format. So it is doable. Okay. All right. Okay, so I'm going to leave the moving averages hidden for now just so that we can be consistent. So when we send this file out, everybody's got what they're looking for. All right. Okay, so that's one more example that I wanted to show. Mandeep, if you want to take it a little further than this, send us an email and just give us, obviously it's a little harder to answer questions like this through the chat, but send us an email, let us know, where you think we are lacking in terms of this data, and we'll see if we can, improve upon it for you. Okay. Because the study summary window can pull any study data and put it in a grid sort of radar screen format. All right, Richard, before I forget, I want to get the Sierra alerts for you. Sierra, let's see, here we go. Here it is. Okay, so this is they call them available main price graph identifiers. So I'm going to send this out to everybody, including Richard. This is a good link. If you like these ideas, this is where we're getting this info. So these are the ones we pretty much use. There are some other ones like the average of the bar. This would be like the midpoint, the average of the high and the low of the bar, that sort of thing. Bid volume, ask volume, we talked about a little bit. There's some others down here that are really not as relevant to, what we're doing, but that's where you can bookmark that and use this as a resource. Sierra's got a great website. It's not, the most enlightening reading because it's documentation, but it's very, 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 very good documentation. Okay. Gannikus had a pretty good, relevant question that we can probably knock out here in the next few minutes before we wrap up, and that is, the use of pivot points. So sometimes what we find is that people will look for a certain condition to be true, but they only will actually take the trade if you're above like S1 or below, R1 or, above R1 or below S1 or something like that. So one way that you could do that, Gannikus, is this. So let's first establish a trade setup. So I'm going to use my 834 EMA just because it's a default setting in here and it'll save us some time. So moving averages. Okay, so this is my default moving averages. It's an 8 EMA crossover. Okay, let's go on a little bit of a bigger time frame, maybe 60 minutes, so we can see a few. Yeah, it's hard because this market is so flat because of this break. So makes it a little harder to see. So I actually think I'll scroll back a little bit. Okay. So this is an example here. Like if you see here, you see the 8 EMA plowing through the 34, right, at this point. So let's use that as kind of our litmus test here. So I'm going to use a color background study, color background based on alert condition. And my study condition is going to be, we're going to use an operator called cross from below, or cross from above in this case. So my condition is going to be, I'm partial to the short side. I want to see when the 8 EMA is going to cross the 34 from above. I want to see the moving average come down through the 34 EMA. So the signal that you might use for this, okay, we'll use a red because we're going short, is going to be like this. Cross from above, oops, ID1.SG1, comma, ID1.SG2. So these are our two moving average pieces. Moving average number 1, the 8, moving average number 2, the 34. Okay? So if we just use these, we'll, oh, did I miss? Oh, you know what? I put a period in here wrong. So this is what this is the error message you get when you make a mistake. Okay, so there's our signal. So there's the crossover occurring, right? So in this case, what we could do is we can add pivot points to the chart. So let's go ahead and add pivot point daily. And there's our pivot points, okay? And at this point we could say, okay, under what condition would we want to take the trade or not take the trade? So one condition where we may, not want to take this trade, let's say, is if the market is above its, let's call it above the pivot point. So we don't want to go short, again, that's just hypothetical, but here's how you might do that. So if we look at the subgraphs section for the pivot points, we can see that the pivot point is subgraph number 13. So ID3, subgraph 13. So if we don't want to take the short side trade when this is happening, when this condition is true, we need to add something to our condition. And that example might be, what we want to prevent is we want to prevent going short the market if the current price at that time is above the pivot point. So in the color background study, we're going to add a new condition to this already existing condition, and it's going to be comma C, which represents the closing price, is greater than ID3, which is the pivot point, dot SG13. So this is our cross from above. This is our short moving average or bearish moving average crossover. And then this is us filtering out short trades if the price is above the pivot point. Actually, you know what? No, I'm sorry. This needs to be the other way around. This should be, we're only taking the trade if the market is below the pivot point, right? So we only want to take the short trade if the market is below the pivot point. So once we add that condition, we need to encapsulate it with the word and in front and the parentheses, like this, and then apply the change. And you can see what happens is the signal goes away. Signal went away because in this existence of the condition, this short signal is there, but the market is above the pivot point. Therefore, the condition is no longer valid. So that's a good example of how you could use pivot points in the context of trying to prevent you from getting into a trade that is opposite the trend. So if you use like S1 or S2 or R2 or R1 as an example of just an overall filter, no matter what, if the market is above R1, I never go short. Let's say that's your mentality. You could easily put that condition in here. All right, so that's a really good question and a good opportunity to explain something pretty important. So a lot of times when people are doing this type of trading, they do get zoned in on the micro level events happening, and sometimes it's easy to forget about the macro level events that are happening, such as the overall position of the market, relative to its benchmark points like pivot points. All right, so hopefully that helps out. There's another one that I didn't really have a lot of time to get through, and I'm not really going to have a chance to go through it today, but I'll include it when I send the files out anyway. Maybe we can touch on it next time. Basically what it was a whole bunch of 834 crossover conditions that we were looking for. The point is here, and maybe we'll talk about this next time, is that you can have varying degrees of a study, and you can highlight that based on, like with different colors. So for example, if the market is above its 8 and 34 EMA, but it's below its 50, the chart can tell you that. But if the market is above its 34, it's above its 8, above its 50, but below its 200, it could tell you something different. But if the market happens to be above its 200, that could be a different condition altogether. So the objective here, which again we didn't really have a chance to cover, was to show the chart on the left, and then show how much more simplified it can be with the chart on the right. We don't really have time to cover that today. Next week, I plan to highlight, pending a couple of little improvements, a new study that Sierra is putting out there that will allow you to actually place trades based on these types of conditions. So an example would be the one we were going through for Gannicus a minute ago would be, in this example, let's say that the market was indeed below its pivot point and that bearish crossover occurred. The charts can actually send trades to infinity and transact. So what we are working on, and it's already really out there, it just needs a little fine tuning, is you can send orders based on these conditions. And we're going to demonstrate next week how you can send orders based on these types of conditions without using the spreadsheet and without hiring a programmer to build the automated system for you. It will be a little rudimentary compared to the automated trading capabilities that exist with the spreadsheet or encoding in ASCIL, which is basically C++. That's what Sierra is written in. But it's something that the average person could easily do using this same type of syntax: greater than, less than, open, high, low, close, ID, 1, SG1, that sort of thing. So if you feel like you could get yourself to a position where you have an identifiable edge based on a series of conditions, we could probably help you code something that can get you into the trade right away, or at the very least give you an alert that can demonstrate or that can show you audibly or visually when those conditions are true. All right, so that's what I'm planning to show next week. There's a couple little things I'd like to see done on that particular study in the next week or so, but we'll discuss that next time. All right, so I think that's probably where we will leave it for now. Hopefully you found it useful. We are going to continually update the YouTube page. We have lots of new stuff happening here at Infinity. Obviously everyone keep your guard up and be ready for tomorrow. Who knows what will happen over the next 5 days, but just keep your head screwed on nice and tight, and stay defensive and maintain your posture and keep focused, and hopefully we can all have some fun with it this week. All right, so thank you very much appreciated. Thanks for coming to the event today. Again, if you want a copy of the files, just send an email to your rep in our office and we'll make sure to get them over to you, and you can import them into your charts and use them along with the recording and maybe learn something. All right, folks, thanks again. Appreciate it. We'll see you next time. Everyone have a great night. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Alrighty, take care. Thank you.